is as follows. China is currently number one trading partner, but the ratio is about 25%. So one quarter of Korean exports goes to China. U.S. used to be number one for a long period of time, but U.S. Euro area becomes number two, and 20%. No, this is Southeast Asia, 20%. In EU and USA both constitute about 11 to 12% of our exports. So we are rather diversified. But 30% of our exports actually go to advanced economies, US, EU, and Japan. And so to that extent, we are affected by global economy. And another rather complicated issue is that although China is our number one trading partner, what we export does not, the final destination of our export to China is not China. What that means is that nearly half of them are exported to the third country as a joint product between Korea and China. So this complicates the whole analysis. Some people say that in case Chinese yuan is appreciated, whether Korea's export to China will increase. And if it's only two-country model, of course, that must be the case. But as I said, half of them are exporting to the third country. That means that nearly half of our exports to China are intermediate or parts. And we were indirectly affected by global economy through the impact of our export to China. So this diagram shows how the direct and indirect effects are related. And we have a model, BOK global model, and by that model we learned that in case U.S. GDP growth is declines by 1 percentage point, Korea's GDP will grow by 0.44 percentage points. So we are very much affected by U.S. economy, and inflation is affected by that, and so forth. And this is the one which the IMF recently published, and as I already mentioned that, I will skip that. And then on the finance channel, I will just explain this by showing the diagram. Our KOSPI stock price index declined by 15% during last month. This was second after the Germany. Germany was affected substantially, but after U.S. downgrade of rating, German's stock market was affected, and the prices declined by 19%, but Korea also was affected very much. And but for the case of bond market, okay, let me explain this by using half a minute. This is a very important distinction between the current state and the economic state of Korea in 2008. We are very much vulnerable to external shocks. As you know, our Korean capital market is nearly completed. I dare say that among the all emerging economies, no economy is more open than Korea to foreign competition, and the capital markets are nearly completely open. So that is why our volatilities in capital markets, including foreign exchange market, are so high. During the year of 2010, if you compute per day fluctuation of foreign exchange, Korean won fluctuated by 0.6% per day during the whole year of 2010. And there are about 25 currencies whose data are available to us. Euro is just one, so the 25 includes almost all currencies of the countries. And Korea was ranked number 4 in terms of the daily fluctuation of foreign exchange during the year of 2010. after South Africa and Russia and Brazil, like that. The Korean won fluctuated even more than euro, which is the currency of the epicenter of the crisis. And this is one of the very important policy issues to us. Why Korean won should have fluctuated more than euro and that was the case. But this year, Korean won has been a little more stabilized. So if we estimate, we do the same analysis for the year of the 2011 from January to probably July, not to August, because some of the data are not available. We are ranked about 10th. That means that Korean won has been stabilized more this year than the year of 2010. But just during the past couple of days, the story is changing, and we are very much affected by the certain changes in Europe and others. And you may wonder why. The reason is that the ratio of European capital is nearly 50%. What that means is that capital that came to Korea, 50% are from Europe. And so we are very much affected by European states. So if capital flew out because of the Korean economic conditions, of course, we have to worry much. But this time, that is not the case. Capital flew out from Korea, particularly Europeans. But that the main reason was not that Koreans' economic prospects are bad, but simply because those European banks need funding. The reason I'm saying this is because, unlike the case of 2008, right after Lehman collapse, capital flew out from both stock market and bond market. But this time, capital are currently flowing in Korean bond market. And of course, Europeans withdrew their capital from Korean bond market, but not substantially, but slightly. But in anyway, there was a capital outflow. But for the case of other Asian central banks or other Asians or other emerging economies, they began investing in Korean bond market. So overall, we somehow maintain not a balance, but not much of a serious capital outflow these days. So that is one of the major distinctions between the current state and the state of Korean economy of 2008. That was what these diagrams show. Due to time constraint, I will just skip most of these. And some of you may wonder whether rollover or borrowings of Korean banks and currently we don't see much of difficulties in that the 100% of the rollover have been done, but the spread has been a little higher these days, and it's quite natural. The whole CDS premium has increased, and so the spread has increased slightly, but rollover rate turned out to be 100%. And contingent risk, some of you may wonder. Yes, of course, there are some contingent risks, but in terms of our financial assets, we didn't invest much in European markets, but we have some substantial liabilities from Europeans. As I said, 50% of the capital to Korea came from Europe. So to that extent, we have certain liabilities, but we don't have much investment. So our risks from investment side are not high, but from liability side are some high. And then what are the silver lining for Korean financial system? I will also explain this by using others. But here, one of the statistics some of you may like to know. Unlike the case of 2008, the short-term debt out of total debt has reduced. It was 52% 3 years ago, but now it was reduced to 30%. And the amount of foreign reserves relative to short-term debt turned out to be over 200%. We have currently a little over $300 billion of foreign reserves, and that is more than twice of our short-term debt. Then what are the future challenges? There are basically two. One is soft landing of household debt problem. The other is financial stability problem, issue, not problem. But first, this is currently one of the more important policy issues that we are currently facing. And soft landing of household debt problem is one of the more critical issues. And our ratio of household debt relative to disposable income amounts to 132%, which is a little higher than that of yours, and probably ranked second in the world after UK. But there are two things. One is that this quintile distribution shows that most of the debts are owed by high-income people rather than low-income people. That was one. And the second one is that, it's not elaborated here, but the second one is that unlike the case of Japan of the late 1980s and early 90s and other countries, our financial institutions are healthy in that we have imposed very strict LTV regulation, loan-to-value regulation. LTV for Korea currently is about 47.2%, which is substantially lower than the LTV that you had during the time of a subprime mortgage or for other countries. And so because of such a low LTV, our financial institutions I don't expect financial institutions will face any substantial difficulties because of this household problem. But just like the case of other debt problems, there is always a conflict between a smoothing process and maintaining debt one. From the long-term perspective, you have to find somehow to deal with such a debt problem. But in the short term, this is basically a smoothing question. For the case of a government debt, it's a matter of revenue smoothing. And so if you if you want to reduce the debt too quickly, that means that in the short term, your economy is likely to be affected much, so that the economy may not grow. So the same problem, we are facing the same problem. And financial stability issue, and just like other countries, of course, we are prepared, or we should prepare for the conditions to meet the Basel III. But basically speaking, Korean banks don't face any whatsoever difficulties in meeting the capital requirements, unlike those of Europeans and others. Why? As we experienced very severe financial crisis in late 1990s, and so Korean banks actually recapitalized, and so our capital state is very high, and so we don't see any difficulties in meeting capital requirements, but we are likely to meet some difficulties in liquidity requirements. Liquidity coverage ratio, or NSFR, which stands for net stable funding ratios. These are all related to liquidities. For the case of LCR, as many of you know, that's a ratio of liquid assets relative to 30-day net cash outflow. So how much of liquid assets you have as compared to the necessity of net cash that the banks need for the 30 days activities, that type of stuff. That should be 100%, but our statistics currently show a little lower than 100%. And net stable funding ratio also means it's more of the long-term one for a year or for 1 year. If there is a required stable funding, and if you're available, what is the ratio of your available stable funding? And so both have to be met have to be over 100%. We're a little short of that, but one is we have to meet by the year of 2015, the other by 2017. So we are making efforts to meet these two requirements. But except for these two, we don't see any problem of meeting Basel III requirements. These are the capital. I don't call those capital control, but at the OECD code, some of you may be familiar with this. The OECD has capital, two liberalization of capital. One is about capital movement. The other is on invisible transactions. And there are certain codes. But at the OECD, there is no distinction between capital control and macroprudential regulation. Macroprudential is this relatively new concept. And so I sent my staff together with those of Finance Ministry to the IMF and to the OECD for consultations. And that the reason is that we are introducing a new macroprudential policy, which I hope other emerging markets follow the program that we propose. That is, here is described as macroprudential stability levy. This is conceptually this similar to bank tax that several European countries introduced, but the difference is that this is not a tax. For the case of tax, it's the government that collects, but this is the levy, so that banks contribute to the fund, and then the fund can be used in case they face any financial stabilities. And this is different from capital control in that there is no discrimination against non-resident. So resident and non-residents are treated equally. So national treatment is applied there, and so forth. So and furthermore, currently levy is imposed on foreign currency non-core liabilities, but in case we find it needed, we can impose it to domestic currency non-deposit liabilities too. And recently, the Act of the Bank of Korea was amended. Unlike most other countries, Korea, like Japan and just one or two other countries, had a single mandate. The single mandate was to maintain price stability. But this time, the act was amended so that the bank was given not a single mandate, but one more mandate of not maintaining the whole financial stability, but we were in the new act, it was stipulated that in carrying out the monetary policy, financial stability has to be considered, or due consideration should be put there. And these are the key changes to the Bank of Korea Act, but due to time constraint, I'll skip the detailed explanations about this. And I spent a little more than I hoped to, but as I said, had I done it in Korean, I could have done much faster. But it's because of linguistic difficulty, it took a little long than I expected. But so, just as I said in the beginning, you may challenge my expectation. My expectation always, rather than saying that what I have done wrong, but I say that my expectation was wrong. Well, in any event, I'll stop there, and I'll be more than happy to entertain some comments and questions from you. Can you? Oh, thank you.
Well, ladies and gentlemen, thank you. That was a terrific presentation. I'm embarrassed when he says that his expectation because of linguistic problems, I don't know what they were. What a terrific presentation in English. I hope that in my Q&A that my English is up to yours. I mean, you know, I was looking forward to this for a lot of reasons, and you've just seen why for the main one. The other was, there have been two institutions that were founded at the same time. The Bank of Korea, and I think you're waiting for me to say the Korea Economic Institute. That's not true. KEI is 30 years old. The Bank of Korea was established in 1950, and so was I. So I have an affinity with the Bank of Korea. It was a very good year. We've got some time for some questions today. You've been very generous in having your lunch and then very politely listening to a terrific presentation. So we're going to allow you to ask the governor some questions. I'm going to ask Bertrand Renaud if you would ask the first question. Please wait until the microphone comes and then identify yourself so the governor knows what your bias is in your question.
Thank you very much, Governor. This was a very informative presentation that brings us up to date. And the general reaction I have is that Korea is well prepared domestically for its challenges. So you were suggesting that the biggest challenges would come from outside. And how are you, what are the kind of strategies that Korea is choosing? You have diversified your trade, your financial system is much better diversified than after 2008. Are you working towards regional arrangements or purely national arrangements to manage external shocks that are coming or are concerning all of us?
One by one. Okay. Well, thank you very much, Bertrand. Actually, Bertrand and I worked together nearly 30 years ago. At that time, we were doing some consulting business for the World Bank, and from KDI, I had an honor of working with him, and I learned a lot from that time and on, and we have made since then on. Well, good question, and I don't think we can find ways to deal with such an impact from outside nationally. And at the G20 meeting last year, Korea as a chair and as a Korea initiative, Korea proposed of establishing a global financial safety net. And this is a way to deal with the impacts of the changes in capital flows on domestic economy, and particularly for some countries, which we call innocent bystanders. And they were just penalized by global crisis. In that case, unless they are protected from such crises, and they are likely to find their own ways to protect, then global imbalances are likely to maintain. That was our argument. And but to be very honest with you, when the crisis broke out in 2008, all countries were fully aware of the